Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Well, this is one of those rare times, though right now I can only recall the one time of the big move up in New York cotton that we saw back in 2011 when I substituted my daily chart in making a weekly commentary for a monthly chart, just so I could get some idea of the definition for this market. Even back then, New York cotton only had a 3-fold increase in price, as compared to the 5-fold increase in price we've seen here. Additionally, there was not such a violent move higher in such a short amount of time. That all being said, where are we and what may technically be next? Well, for starters, LME nickel is currently suspended. That is where we are right now. How did we get here? Well, technically, I've already spoken well before on the monthly key reversal down here in September and the immediate countering monthly key reversal up in November, as I've argued repeatedly, the start of this current move higher. Additionally, I could speak about the 2011-2012 reverse head and shoulders pattern and the more recent 2019 to 2022 ascending wedge pattern as further support for the move higher, along with a huge June 2021 to January 2022 diamond pattern. That, though not visible on this monthly chart, was the base of the move higher. I can finally add the bullish bow tie formation of the 1-year moving average, currently at 24,825, the 2-year moving average currently 19,955, and the 3-year moving average currently 17,955. That went in and crossed over in the right order in October 2020, and which led to a break higher 17 sessions after. Now that was well within the 15 to 20 session window to see such a move. So if all that technically being said, it would not have reasonably led to such an excessive moves higher as we have been privy to. The peak today, seen at 101,365, is just under the compound GAN number at 101,330. Just over, actually, the GAN number. The nearest GAN number to the latest traded price is obviously 81,000, but we also have one just below at 78,730. Finally, key levels to look out for are the 50% Fibonacci lines for the 2016-2022 move at 54,490 and a 2020 to 2022 move at 56,115, plus the prior all-time high back in 2007 at 51,800. I'd also start paying attention to some of the lesser Fibonacci levels, the 38.2% Fibonacci line for both of the previous moves at 43.15 and 45.25 respectively, and also the 61.8% Fibonacci lines at 65.565 and 66.805 respectively as well. Now these numbers may be further finessed once I manage to return to the daily chart. For the same reason as nickel, I have chosen to take a step back and take a look at the monthly charts here for my weekly commentary rather than the daily charts, as a better picture can be seen and the context in which this move up is happening is clearer. Primarily there are 2 significant patterns, one currently in operation and one just finished, plus a possible third that may be in formation. The 2 principal patterns are firstly the still operational 2016 to 2020 bullish Andrews pitchfork, with the market breaching for a second session in recent months, the middle tine currently at 39.07 of this pattern. The market has indeed moved quite a way, considerably quite a way towards the upper tine, currently at 52.30, breaching the all-time high back in 2006 at 45.80, but we are currently well below it, as well as just around the 2007 high at 41.66. However, we are still early on in this month. The next major pattern is the completed 2015 to date bullish halfway hesitation. This has a target in the region of the 2007 high in the 38.50 area, which obviously has already been achieved. The final possible pattern is a 2020 to date possible ascending expanding wedge pattern, currently 32.35 to 44.17. This, in many ways, is a nascent pattern, plus it has been breached on the upside this month, though no closes outside as yet. However, I feel obliged to point out, as a possibility in the coming action. Finally, there are 4 points I'd like to recognize. Firstly, the 3 golden crosses seen in recent months of the 1-year moving average up over the 5-year, the 2-year moving average up the 3-year, and the 2-year moving average up over the 5-year. I realize these are lagging indicators, but the number of such golden crosses within the short period of months is noteworthy. Finally, there is the technical origin of the latest move higher, the monthly key reversal up we saw in December last year. I feel this is still worth highlighting, as this is the latest episode in the move higher that we have seen since. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.